Welcome to everyone. This video is the second video of a series about cycle in stock market. During this series of videos we will see, by using cycles, how to trade successfully the stock market to increase our profits. In this video, you will learn how to identify the peaks and the lows in stock market, using the Hurst cycles principles. Also, every week I will publish some update about different market. Before we start, make sure you read carefully the disclaimer. If you like this video, please click on the like button, subscribe to make sure you don't miss the next videos. All the videos are for educational purpose only. Let's start with this chart of the Dow Jones Industrial Average. With that kind of chart, it is very difficult, even almost impossible to know what the market will do next. Is the peak a minor or major peak? And when and where the correction will be over and when the market will bottom. On this chart I add the 40-day cycle. By adding this cycle, the picture is already a little bit more clear. We can already have a little idea when to expect the low for this cycle. We can expect the next two 40-day cycle low around this time. By drawing the 40-day cycle on the chart, we already know approximately when the market should find support. Since we know from where a new 40-day cycle will start, we can estimate the period when the market will start a new uptrend. We can now estimate approximately the peak date in about 17 days, and the next low should occur around 34 days later. The 34 days is the average length for the 40-day cycle. Sometime it can be shorter or little bit longer. In general, in bull trend cycles have tendency to be shorter and during the bear trend little longer. For example, in one 80-day cycle we have two 40-day cycle. The first one can be shorter and the second one longer, making an average around 34 days. The peaks identification. There is three different ways to identify the cycle's peaks. There is what's Hurst called VTL. VTL stand for value trend line, but to make easy I will call it the cycle trend line. There is the FLD. FLD stand for future line of demarcation, again to make easy to understand I call it the cycle lines. In a future video we will come back on the cycle lines. And the third one, using the cycle representation, like we did above for the cycle lows identification. The question is, on this chart where is the 40-day cycle peak? First let's identify the last 20 days cycle low. Then, draw an uptrend line from the bottom of the chart trough the 20-day cycle low. The blue line. When the market crossed below the trend line, this confirmed the peak of the next higher cycle is formed or is in formation. In this case the trend line have been drawn with the 20-day cycle, then we can identify the 40-day cycle peak right there. This trend line Hurst called it the VTL, it stand for value trend line. The general rules when the market break below the VTL. This confirmed the peak of the next higher degree cycle is forming or formed. In this case since the VTL is a 20 days VTL, the next higher degree cycle is the 40 days, then this peak is the 40 days peak. Let's examine where the price peak occurred compared to the cycle peak. The cycle peak is right there and the price peak occur after the cycle peak. Hurst called it the right translation. When this occurs this is usually bullish for the market. In his case, we can expect a moderate correction. When the market cross above or below his cycle line, this confirmed the cycle peak or low is formed. Also when the market crosses cycle lines, or FLD, will provide a potential target prices, we will see this in the next video. The blue line represent the cycle lines, Hurst called them the FLD which stand for the future line of demarcation. Using the cycle length, we can anticipate the approximately the peak of the cycle. Keeping the 40 days cycle as example. We know the 40 days cycle length is 34 days on average. In perfect world the peak should occur after 17 days. If the trend is bullish, the peak will occur after 17 days, on the right part of the cycle. If bearish it will happen before 17 days. The black cycle line is the 40-day cycle and in green the 80-day cycle. The red line is where the second 40-day cycle prices peak occurred. As we can see, it's happened on the left side of the cycle peak. We call that left translation, which usually is bearish for the market. So we can expect a bigger correction in the second 40-day cycle than the first one. At the same time, the red line marked the 80-day cycle peak, which occurred on the right side of the cycle peak. The correction for the 80-day cycle will be moderate, and we already have an idea where it can bottom and with a target price from the cycle line. Let's put together what we just learned today. Let's draw the first 20-day cycle, with the both 10-day cycle. The bottom on the left is a major low of the SP 500. The 10-day cycle should find support here, and the 20 days here. We can expect the 20-day cycle to peak soon. Here the 10-day cycle peak, and the 10 days low. It's time to draw the 10-day cycle trend line. The market crossed below the 10-day cycle trend line. Confirming the 20-day cycle peak is in formation. See where the 20 days price peak occur compared to the cycle peak. On the right side of the cycle, we call right translation, usually bullish for the market, meaning the correction should be moderate. We are now in the time zone where the 20 days low should occur, so we can expect a rebound soon. We can label with confidence the 20 days low. It's time to draw the next future 10 and 20 days cycle. We can estimate approximately the next 20 days peaks and bottoms. This is only an estimation, because of the principle of variation, see the previous video. The blue lines are the 20-day cycle peaks and the red the 20-day cycle's trough. Now we can draw the 20-day cycle trend line, which will help us to identify the 40-day cycle peak. The market crossed below the trend line. This telling us, there is a very high probability the 40-day cycle peak is here, or is in formation. Let's label the 40 days peak. It may be not at this exact place, but for sure he is in formation. The 40-day cycle peak occurred late in the cycle. We have a right translation, meaning the correction shouldn't be very important. Time-wise we are in the target zone, 37 days. On the nominal model, the 40-day cycle average is 34 days. We have to wait a little bit to label the 40-day cycle low. The prices go above the previous high, but since the last 40-day cycle peak, the market moved basically sideways. Let's label the 40-day cycle low. Time to draw the 40-day cycle trend line, which will help us to identify the 80 days peak when the market will cross below this trend line. The market crossed below his trend line, telling us the 80 days cycle peak is in formation. Is this the peak or he's still to come? For now is not the most important point. The most important is where the market will find support. On the nominal model, the 80-day cycle is an average of 68 days. At that point only 54 days elapsed since the major low. It is little bit too short to be the 80-day cycle low. So we can expect a rally to form the next 10 days cycle peak. Then a decline which should end in around 14 days. Some analysts will place the 40 days low here and draw the 40 days trend line. But in this case the 40-day cycle is 48 days long. It is little bit too long for a 40-day cycle. But let's pretend this is the 40 days low. Let's see what will change. The market crossed below his trend line here, telling us the 80 days peak is formed. What's next? The market should rally to the next 10 days cycle peak and decline into the 80 days cycle low. So there is no difference for the next move. As expected, we had a rally for the 10 days cycle. Then the market declined to form the 80 days cycle low. The low occurred at 69 days. Remember, the 80 days average is 68 days. We can now draw the 80 days cycle trend line and expected the market moving up. If in the next few days the market make new low, then we will adjust the trend line, but it's matter of 1 or 2 days maximum. As you can see, using the Hurst cycle principle is very helpful to trade the markets and have a very high degree of accuracy. I hope you enjoy this video and this was helpful. This is the end of this video. Thank you for following me. Next week I will publish another video with different topic. If you like the video, please click on the like button, subscribe to make sure you don't miss the next important videos.